Good afternoon, traders and investors. It's Will back here with another one. Hopefully all of you have had a very beautiful weekend so far, and it's that time of the week again where we go over the top 5 options plays for the upcoming week. Now, keep in mind, all of these options plays are going to be for selling, or aka writing options plays, more specifically writing put options as part of the larger wheel strategy that we like to run on the channel. So in today's video, we have a few things prepared for you guys today. Now, number one, we are going to be setting the tone for the week. What do we have to look for in terms of big earnings, and also in terms of the macroeconomic events that could be coming out, and also do a brief rundown of the technical analysis of the SPY and the QQQ to see whether or not we are still in healthy market conditions. Thereafter, we're going to go over a few of the strategy rules that I like to use when I'm looking to write put options. And of course, lastly, guys, get into the top 5 options plays. And as a whole, last week was a very good week once again here for writing put options. You can see every single put option that we chose to write, both myself individually and as part of the group in the Discord, we all were pretty much having very, very good success. All wins, no losses to speak of. And that's pretty much been a recurring theme, guys. You know, we've been doing these videos now, the top 5 options videos, pretty much since the month of February. And the losses have been very, very few and far between. Since starting my Discord, you can look at all the wheel trade sections. They're mostly all profitable. A few tiny little losses here and there. As a matter of fact, only 2 losses in the past month and a half, and they were very, very, very small. The wins largely have made up for them. So very, very happy with our performance in the last week of trading as well. So to set the context for this week, first, guys, what are we going to look at? Well, in terms of our macroeconomic data, let's have a look to see if anything can impact us. Well, as we can see right here, there's not much, right? Monday, Tuesday, Wednesday, nothing much except for a bunch of Fed members speaking. On Thursday, we do have a manufacturing report. Now, the impact is said to be heavy, but I don't think it's going to be that big of a deal for the market. We know manufacturing has been somewhat weak as of recently, but unless we get a huge miss on this number, I do not expect the market to move too much because of this news report right here. What's going to mostly move the markets this week, guys, is once again going to be a very, very heavy week of earnings. And a lot of the heavier names, guys, do start a bit later to the midpoint in the week. Now, Monday, not that much to speak of, even though we have a bunch of companies, but Tuesday, going to get a lot of interesting ones, guys. 3M, RTX, Lockheed Martin, just to name a few, Texas Instruments, one of your semiconductor plays. Enphase is going to come off and tell us how the solar industry is doing. Then on the Wednesday session, of course, some big ones, guys. Tesla and Lam Research. Lam Research is a semiconductor equipment manufacturer similar to ASML. And you guys saw what happened to ASML last week. So going to be curious to see what they say here. That could have a lasting or a short-term impact on some semiconductor names. We also have Coca-Cola and a few other names to speak of too. Thursday, another decently sized day here, guys, with UPS, probably going to be the bigger one of the day. And as you can see, guys, so many different companies, but this is going to open a ton of possible trading opportunities after earnings, because here on the channel, we don't really like playing, especially writing options leading into earnings. We'd rather wait until after, and then if there's any significant drops coming into big support levels, that's where we want to kind of strike on our favorite companies that may have gotten beaten down a little bit. In terms of the technicals, guys, where do we stand? Well, the bulls are in absolute full control of all time frames. They control the monthly uptrends. They control the weekly uptrends too, and they do still control the daily uptrend, and that is on the SPY and on the QQQ as well. Monthly uptrend, weekly uptrend, and daily uptrend as well. And we know that we have some fairly large support areas below us on the QQQ in terms of the daily, and even on the SPY coming down here into low to mid 570s is a decent area of support. So even if we have a little bit of a market pullback, guys, it's going to open up a ton of opportunities to trade, but we have to be careful here. We are not in the business of chasing companies pushing towards the all-time highs, especially for writing puts, right? Think of something like Nvidia. The last thing you want to do when the markets are at the all-time highs, and Nvidia is at the all-time highs too, is write short puts super close to the money, and then let's say the markets have a big pullback, Nvidia has a bit of a weekly pullback as well, you get trapped all the way up here, and it's just not fun, right? So we'll respect the rules of the strategy, guys. We are not in the business of chasing the market. You need to identify the correct opportunities that are at already large areas of weekly support that possibly haven't ran as much as the rest of the market, right? So that's kind of what we're looking into for this week, guys. Should be a fairly smooth sailing week in terms of macroeconomic events. But like I said, some of these earnings could impact a lot of these companies or their industry peers in a decent fashion. So we'll be on the lookout for some opportunities. Some of the ones that I'll be looking to possibly play after earnings, guys. GM could be interesting, 3M as well. Enphase, if they have a big drop, could be interesting playing those as well. Texas Instruments, Tesla, Lam Research, maybe some Vertiv, Coca-Cola perhaps if it comes back down into a big area of support. Coca-Cola possibly looking down here in the high 70s in the event that their earnings are less than favorable. So those are the quality of companies I'll be looking at. UPS as well in the mid 120s could be very interesting if they come back and pick us up. So going to play a lot of the bigger companies, guys, and staying away from some of your smaller, more volatile names. Hopefully that makes sense. Now, part 2 of the video, guys, let's get into a bit of the strategy rules for selling puts, right? So in terms of the strategy rules, guys, I'll be going over these very, very, very quickly. So I have a 30-minute video, guys, on the tutorial, how I run this strategy, how I pick my stocks, how I pick my strike prices. It's a more in-depth strategy video here, and I'll leave that in the top right corner of the video right now, and also down below in the link in the description. So if you haven't checked out that video, guys, it's going to give a much more in-depth, strategy guide in terms of how we run the put wheel strategy, more so than what I'm about to do right now. We're just going to do a very quick recap right now. So rule number 1 for selling puts, guys, what exactly is selling puts? Well, you can just think of it as a buy limit order that pays you. Let me explain. Let's say you want to pick up 100 shares of Google in the lower range right here. Let's call it about 160, right? In this little support range right here with the 200-day moving average. Let's say you want to buy 100 shares. There's 2 ways of doing that, right? Either we could set a buy limit order for 100 shares down here, but if the market just runs away or stays flat, well, then we never pick up the shares. We never make any money. That is where selling puts comes in line. So take a look here at Google's options chain. Let me just pull it up for you guys real quick. If I wanted to buy the 100 shares at 160, I could use a short put for that matter. We would be selling the put to open. And as you can see right here, the 160 gives us about $63. So if Google stock ends above 160 by the end of Friday close, we just get to pocket all of this $63. And in the event it ends below, well, we end up buying the shares at the Friday close, but we still keep the $63, which gives us a little bit of a reduction in the average cost. We get 63 cents per share on a discount for buying those Google shares using short puts. So hopefully that makes sense. Now, in terms of the strategy rules, well, they're very, very easy, guys. Number 1, only ever write options, especially put options, on a solid company, because there's always a risk of buying the shares, right? So the last thing you want to do is write puts on a company that you don't really like. You're just doing it because the premium is good. Then you get assigned the shares. The stock goes down 5-10%. Then you're asking yourself, what am I doing even holding this stock? I don't even have any conviction in it, right? So number 1, only ever write puts, guys, on companies that you actually want to own at the price you actually want to own them at. Number 2, we're looking for stocks in monthly uptrends or long-term monthly ranges. Monthly uptrend is fairly obvious, similar to SPY right here, right? So that gives us a better indication that the bulls will be backing us up at the larger areas of monthly support, going for further trend continuation. A long-term range of accumulation, guys, could be something like a Square. We know that Square has been kind of caught down here, trapped down here for the last 2 years in the lower range. So usually when I see very, very nice ranges of accumulation, those are the trades that I like to go for as well. So in terms of the rules, guys, always keep yourself to either a monthly uptrend or a long-term range of support. Number 3, very important. We do not want to write any puts on companies that have earnings this week. Very, very simply, guys, you guys know the drill, right? Sometimes the expected move for earnings is 5% either way, and sometimes companies can go down 10, 15, 20%. So the last thing you want to do is write a put option on a company that's earnings this week because the premiums are good. Then you get blown away by earnings. You're instantly down 10 to 15%. And once again, you're asking yourself, why did I write puts before earnings? It's way too volatile. So if you want to respect this strategy to the T, never, 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 guys, write any short puts on companies that have earnings this week. In my experience, it is just not worth the possible big losses that you may end up with. Number 4, we want to be writing stocks in an area of support or a breakout retest range. I always use the Autodesk example for this one. So a long-term range of accumulation, I showed it to you on Square. Long-term support range is simply this down here. Very, very obvious, right? We're looking to sell puts in this support range because we know the bulls have established a good level, and most likely when we pull down into it, we're likely to get a little bit of a bounce. Breakout retest is a little bit different. It's known as the trend continuation trade. When we have a nice weekly uptrend and we break out of the top end of a range of resistance, usually we can find a retest of the top end of the range and run. So this retest area is usually a very high probability setup for some trend continuation. So I'll be targeting one of these two setups on all of the plays, guys, either the breakout retest trade or the support area trade. Now, number 5, writing at or lower than the expected move. So a stock always has an expected move every single week, guys. If you don't know what that is, you can go to this free website right here, optionsai.com. They have a free expected move calculator. And as you can see, Google right now has an expected move to the downside of about 2.2%. So we want to be writing below this expected move here of about $160. It just gives us the best odds that in the event we open the week red and go below this expected move, usually we have a little bit of mean reversion midway through the week, pulls us back into the expected move, and then we can probably close the trades at a profit. Now, number 6, we want to be writing on a red or flat day. This goes with the prior point as well. If we know we're supposed to be targeting the lower end of the expected move, it stands to argue that the best case scenario is on Monday or Tuesday, the stock pulls down into the expected move, and we can start writing strikes below that expected move on that red day. Think of maybe the 158, 157 below the expected move. So you will never see me write puts, guys, on a bright green day for a stock. We're not trying to chase these stocks to the upside, guys. We want a pullback, write the puts below the expected move, and then wait for the little bit of a bounce, right? And then before last, this is our ROI. We want to be targeting between 0.5% and 0.75% in weekly premium. What does this mean, guys? This is your ROI per week, right? So if you want to look for the 0.5% rule, it's very, very, very simple. It allows you to, it's a mental math rule, right? This has just been a rule that I've derived over the past 6-7 years of trading this strategy, which gives us the best trade-off between risk of assignment and ROI, right? So we know that if we write puts too close to the current stock price, we have a high risk of being assigned. And if we write too far away, we're just not making any money, right? So the 0.5% rule is a very easy way to get the best bang for your buck in my experience. And it goes as follow. Let's say you want to write these puts at the 160 strike. Well, you need to find 0.5% on the bid. 0.5%, guys, very easy mental math. Just divide the strike price by 2, and that's the amount you need to see on the bid. So half of 160 is roughly 80 cents. So we need to see 80 cents on the bid right here. If you want me to do the math, 0.880 cents divided by 160, that is literally 0.5%. So as you can see, quick mental math, we're looking at the 160s on Google right now. Are we getting enough cash? No, it's only at 63 cents and we need to look for 80, right? So that's just a quick rule of thumb to be able to do it in your head, to be able to go through these options chains very, very quickly. And lastly, we want to set a take profit order, guys, at 90% of the contract value. That just means that if we're writing puts on a Monday or Tuesday, it's a very passive strategy. You want to set the take profits because if on Tuesday afternoon or Wednesday morning, the contract is now 90% profitable, you can close that and then look for another play, right? So we want to optimize the efficiency of using our capital. Now, in the event the stock closes below our strike price and we get assigned the shares, we have to buy the shares. What we're going to do is the very following week, we're going to be writing covered calls and same rules, guys. For the covered calls, you want to be looking between 0.5% and 1% in weekly premium. And we will be writing at the assigned strike price or one strike higher. The only time I write one strike higher, guys, is let's say we get assigned on Google at the 160 mark. And then the following Monday, it gaps up to 163. Well, then we can probably write one strike higher, get a little bit more of profit on the shares themselves and write covered calls a little bit higher. That's the only circumstance that you'll find me writing puts one strike above. And for all of you guys who want to write longer dated puts, 30-day puts, 45-day puts, no problem at all, guys. I do that quite frequently as well. Usually you make more money running the weeklies, but if I'm writing longer dated puts, I want to find as close as possible to 0.5% rule as well per week, right? So if you're writing 4 weeks out, stands to argue you should be looking for 4 times 0.05, which is roughly 2% in terms of premium for those 30 days. Hopefully that makes sense, right? Now, let's get into the good stuff, guys. And we're gonna go through the top 5 options plays for the week. So number 1 is once again going to be Google. We've been having a lot of success writing some premium on this stock in these lower levels over the past 2 months that Google has been stuck here. I love this stock for a few reasons. Number 1, it's Google. They're not going anywhere, right? But number 2 is the valuation, guys. The valuation right now at around the $160 mark is extremely, extremely cheap at a 1.14 peg. Glorious profit margins for the company, amazing free cash flow as well, and all of our analyst estimates, guys, are above the current share price. Look at your EPS expansion, look at your revenue expansion. So it's tough to make the case, guys, that Google is over and done for, right? Google is such a solid company. So that's why I want to benefit from this accumulation zone right here. We also have a bit of an inverse head and shoulders pattern probably forming right now, which could lead us to have some decent upside in the stock, right? So the expected move for Google for the week is 159.92. So we want to be writing either the 160s or slightly below. But as I said, we went through this theoretical example earlier, right? We do not yet have the 0.5% rule on the 160s. It is almost ready, guys. So in the event we see a dip on a Monday or Tuesday session, that will probably free up the $160 strike for at least 80 cents. Now, in the event Google opens up very red Monday or Tuesday and goes down 2-3% right away, are we still going to write the 160s, guys? That now that we'll be on top of them pretty much? No, you want to go lower at that point. Look at the 157s or look at the 155s. The art of this strategy is being dynamic depending on the size of the moves down on a Monday or Tuesday session, right? So if we come down hard on Google, keep an eye on the lower strikes. So at first glance, my preferred strikes for the week on Google will be 160 down to 155, as low as we can possibly get while still getting our 0.5% rule, which should roughly be between 75 and 80 cents. So that is trade number one that we're looking for on Google. Now, trade number two that we're looking for is going to be a semiconductor play, which is ON Semiconductor. So the reason I like ON as well is it's been in a big range, guys, a super big range for pretty much the last 2 years. Yes, it's popped above, but you guys can see that this is very solid support. The 200 weekly moving average as well is this line of green right here. We've been having great success writing puts on ON Semiconductor the entire year so far, pretty much. So I want to continue to do so because the fundamentals of the business are also doing quite well. The valuation of the company is also relatively cheap as well, trading at roughly a 1 peg if you take in consideration the huge EPS expansion that they're going to be having 25, 26, 27, and revenue growth as well is going to be coming back to normal. So ON Semiconductor, love this range of accumulation. The expected move for the week is all the way down here, 64.87, deep in our range of support. So let's go shopping and see if we can find some short puts here under 65, let's call it, right? So let's pull up the options chain for ON Semiconductor. Let me just pull it up real quick for you guys. And let's go shopping together under the expected move, right? So looking under 65, we can already see the 64s, guys, are giving 0.5%. Half of 64 is 32, so we're getting better than 32. So at a first glance, the 64s do fit our criteria. However, if ON Semiconductor has a little bit of a slide Monday or Tuesday morning, coming down 67, 66, we might be able to even get lower. Think the 63s or even the 62s. So the strikes that I'll be looking for this week, 64 all the way down to $62. Now, obviously, if we have a big drop, 2, 3, 4% Monday or Tuesday, come down into 66, we might be able to find even lower than that, guys. Think 62, 61, maybe even $60, depending on the size of the drop. So 64 down to 60, we need to be dynamic, try to get as low as possible while still getting roughly 32 cents on the bid. Hopefully that makes sense. That was trade number two. Trade number three is going to be Chewy. So Chewy, probably you guys know a lot about this company, right? It is a pet product business, but their fundamentals have been improving significantly over the past year. Their stock price is fairly crushed from the all-time highs in 2021. That being said, the fundamentals are fairly good right here, guys. We're trading at right around a 1 price to sales, and the company is now becoming profitable. Take a look at this P&L curve, right? For net margins, you can see they used to be struggling to have net margin profitability, and now their most recent 2 quarters, they're really starting to ramp. In terms of the balance sheet is healthy. The company does not have too much debt. As you can see, a lot of cash, and they do make a decent amount of free cash flow, so their balance sheet is good. And take a look at your growth curves right here. You can see EPS moving to the positive category right now, and revenue consistently increasing as well. This company brings in approximately $11-12 billion of revenue per year, and their market cap is only $12 billion. So right around a price to sales. I like this one for a very fast growing company as well. That being said, let's look at the support range right here, and we can see it's a little bit lower, right? The support range really starts at about 27 down to about 24.50. So we want to be targeting the lower end of this. But keep in mind, Chewy, guys, right now is in a very beautiful longer term weekly uptrend, right? Beautiful weekly uptrend by the bulls, looking for the weekly higher lows. And we have a bunch of confluence down here in this area since the month of June. A little bit of a cheaper stock as well. So for those of you that don't have a tremendous amount of capital, Chewy usually has very good volatility, and the share price for 100 shares is relatively cheap. That being said, the expected move for the week is 27.74. So let's go shopping together. Can we find some good premiums on Chewy for the week below our expected move of 27.74? So let's have a look here. So let's have a look. Below 27.74, well, 27.50 and 27. As you can see, 27.50 is above our 0.5% rule. We'd be looking for roughly 15 cents for it to be worth our time. So 27.50 at a first glance is healthy, and it is below the expected move. However, I want to get a little bit better on this one. If Chewy has a little bit of a drop here Monday and Tuesday, which is perfectly normal for this stock, sometimes you can catch dips on it 2-3% to the downside. Let's say it comes into the high 27s Monday and Tuesday. That's going to free up possibly some premiums here in my support zone, 26.50 down to 24.50, right? So be dynamic with this one as well, guys. If we get a drop, we want to be looking 26.50 down to roughly 25. So always look for about 15 cents on the bid. And once again, as low as you can possibly go, as close as possible here to the bigger range of support, 26.50 all the way down to roughly 25. So hopefully that makes sense for Chewy. The fourth stock on the list is going to be Elf Beauty. Now, I love playing Elf Beauty for a few reasons, guys. Number one, same thing as Chewy. The price to sales of the company now is quite cheap. Market cap is only $6 billion, and they're growing their fundamentals very nicely. Beautiful EPS ramp. All the analyst price targets are above the current share price right now, and revenue ramp is going to be quite good as well. It's trading relatively very cheap to where it was earlier on in the year, and we are absolutely crushed, guys, on some of these larger time frames. Weekly RSI is almost oversold. The daily was oversold, and we got a nice little pop, but we're still kind of struggling in this big area of support, guys. 107 down to roughly 91, and at $91, $95 roughly, the 200 weekly MA is coming in for to play some very big defense. And Elf Beauty always has some very good volatility every single week. Usually, sometimes you can catch this one having minus 3, 4, 5% days on a Monday or Tuesday, guys, like last Tuesday as well, right? And if that happens, usually it frees up some amazing strikes in the mid $90 range at this point. So the expected move, guys, is 101.51. So let's go shopping on Elf and see what we can find below that expected move, preferably below the $100 mark. So let's go shopping on Elf together, shall we? So moving into Elf. So Elf Beauty, as you can see right here, guys, the premiums on this company are very good. Let me just expand this chain because we can't even see how far we have to go down into the expected move, right? Oops, let me just do all the moneyness here. So as you can see, guys, where's the 0.5% rule on Elf Beauty? It is pretty much at $97 right here, 55 cents on the bid, which is quite attractive. And that is significantly below the expected move of 101.50. But it gets even better, guys. In the event Elf Beauty has a drop here Monday or Tuesday morning, coming down 105, 104, 103, that is going to free up even better strikes. Think the 94s, 93s, maybe even 92s. We want to be going as low as possible into this big green box of support, which is, for all intents and purposes, the best ones are the mid to low 90s. So if I can find some mid to low 90s on Elf Beauty early on in the week, I will probably be taking this trade as well. We traded it last week with the group, and it was part of the top 5 options plays on the channel last week as well. And this one was a fairly good trade too. So that is the trade on Elf Beauty. That's trade number 4. And trade number 5 is going to be a fairly interesting one as well. I have 2 in this number 5 section, right? One of them is going to be Square. So Square, the reason that I like this one, guys, is we've been trapped pretty much in this 2-year range. This is the monthly time frame, 2-year range of accumulation. The support area was roughly 65 down to about 55 down there, right? But now they're doing something, guys. They are going for the weekly trend change. So I like this one. We are now consistently above all the short-term moving averages on the weekly, and the moving averages are starting to cross. The momentum is getting favorable for the bulls. That being said, this is a breakout retest trade, right? So weekly uptrend, we break out of this previous area of resistance, 68. Now we might be looking for a little bit of a retest, right? So in the event, guys, Square's been having heavy momentum the last 2 weeks. In the event we start pulling back here, it's going to open up some strikes here. 70 all the way down to $68 is where I want to strike on this one. The expected move for the week is 72.03, a little bit too high, but Square does have some good volatility. So let's go shopping to see if we can find something on Square, below the expected move, but preferably in my desired range, 70 to about 68, right? So let's go shopping on Square, shall we? So the options chain on Square, as you can see right here, at the $70 mark, guys, not enough premium. But below the expected move of 72, we do actually have one strike, which is the $71. It is roughly 0.5% at 34 cents, right? Half of 71 is roughly 35. So we're kind of getting the desired premium. But this one, we would like to see a little bit of a pullback, guys. If we can pull back $73, $72 into the expected move, that is going to free up my desired strikes of the 70s, maybe even 69s, right? Depending on the size of the move down on Monday or Tuesday. If Square has a really bad day, Monday or Tuesday, right? Coming down below the expected move in one day, that's going to free up the 69s, maybe even 68s. So as low as we can possibly get, guys, for myself personally, I'll be looking to find some trades in the $70 to $68 range for the week on Square. So that is trade number one out of, the fifth trade, part one. Fifth trade, part two, is going to be BITX. So for those of you that don't know, this is the 2 times leveraged ETF on Bitcoin. So we need to do our analysis on Bitcoin. Now, Bitcoin's had a tremendous rally, guys, over the past 2 weeks, but we are coming into some very big resistance, guys. 68 up to about 72K, the all-time highs. This is going to be a massive area of resistance. Now, early on in the week, you can see the bulls are getting a little bit weak here. That's not to say they can't just blast off for another leg higher, but in the event, guys, we get some consolidation back towards our previous high range right here. Like, let's call it 65, 64,000, right? If we go for the retest of this range before another leg up, I'll be looking for this dip throughout the week, guys, and I'll be using BITX because it has such good premiums for the volatility, right? So right now it's a little bit too high, but I'll explain the type of move we're looking for. The expected move on BITX right now is 29.64, guys. That is a 10% drawdown from the current levels, which means the expected move on Bitcoin itself is half of 10%. It's about 5%. And funny enough, if we pull up the chart for Bitcoin, where would we be if we get a 5% drop, guys? Well, literally in my target area, right? So I'll be patient on this one, waiting for a little bit of a pullback, and look at these options on BITX, guys. The options on BITX are amazing, but full disclaimer, this is a little bit more of a risky trade. If you do not like crypto, if you don't like Bitcoin at all, I obviously cannot tell you guys, I can't tell you guys to take any of these plays anyways, because none of this is financial advice, right? But if you don't like crypto and Bitcoin, maybe this is one that you may stay away for. But all of those of you who do like this trade, you will find some very good options premium on this one right here. So the expected move is 29.64. Can we find anything lower? We need to have a dip first, right? So we'll probably be able to find something in the 28-27 area. But at a first glance, look how much premium, guys, they're paying even under, right? At the 28.50, they're paying over 1%, right? You need to see the 0.5% rule would be all the way down here at the 27s, right? 27s paying 15, and a move down to 27 in 1 week, guys, that would be a drop on BITX of roughly 17%. You would need to see Bitcoin come down 9%. That is literally 2 times the expected move almost. So the safest bet here, it is crypto after all, right, is the $27 strike. But if we get a dip, guys, this is when this trade really comes alive. If we get a dip down into, let's say, 30 or maybe even into the expected move, if Bitcoin really pulls back hard this week, that'll free up some very good premium on the 27 all the way down to 25 strikes, depending how aggressive you are. This is my desired range for being conservative for the week. If you want to be more aggressive, by all means, of course, you can trade the higher strikes. But if you want to be conservative and have the best chance of not being assigned while still getting healthy premium, 27 down to $25 on a BITX pullback is my desired strike range. So hopefully that makes sense for all of those plays. And in terms of the bonus plays, guys, you guys always know I love to give you guys a bunch of bonus plays. Well, we're going to be looking at a few, guys. End phase after earnings. If end phase gets destroyed on earnings and they come down, let's say, 7-10%, and they come all the way down here into the low $80 range, we may be even able to write some short puts mid-70s, right? Mid-70s would be very, very interesting for end phase. Another one after earnings I'll be looking for is UPS. FedEx had an earnings disaster last time about a month ago. Look at this big drop on FedEx. If for every which reason we get a similar drop on UPS, bringing us down back here into the mid 120 range where we have all this recent support, but not only that recent support, guys, you go all the way back here, huge resistance from 2018, 2017, 2019. That is the mid to lower 120s. So if UPS falls down there, I'll be looking to go shopping. And the other one that I'll be looking for after earnings, these are all after the earnings come out, not before, guys. We're not going to speculate on earnings here, right? LRCX. If LRCX, you guys saw what happened to ASML last week, LRCX fell in tandem. Now, in the event they do not have a good earnings them either, we'll be looking possibly down here towards the 200 weekly moving average, guys. $65, $60 strikes, depending on the size of a possible drop, of course, right? $65 to $60 is my desired strike range. So those are just a few ideas for the post-earnings plays. Another one, a China trade that I might be interested in taking is Baidu. So obviously China stocks had a tremendous rally after the stimulus news. Baidu is one that gave it all back, but the company's not doing poorly at all, guys. The PEG ratio is literally a 0.8. That is nothing. The free cash flow yield is 17%. That is absolutely fantastic. There's nothing wrong with this company. It is a highly profitable company. It's known as the Google of China. Look at this EPS expansion. Look at this revenue expansion. There is nothing wrong with the company other than the fact that it gets associated with the China trade bundle, which is kind of an unfavorable trade. Well, it has been an unfavorable trade for the last 3 years, other than this most recent weekly pop, right? So Baidu, if we drop a little bit more here, I'd be highly interested, guys, in the high 80s, $88, $86. That's my preferred desired range for Baidu in the event we come down there. Another one post earnings that could be interesting for us is Coca-Cola. Coca-Cola is not known to miss earnings that often, but if they do, we are coming into one of my favorite trades, guys. This is the breakout and possibly retest of a prior range. You see it best on the monthly, right? Breakout of the prior all-time highs, possible retest down here. If we can see Coca-Cola have a rare miss on earnings and come down 3-4%. It does not happen that often, but I will be sitting here in the high 60s, $67, $66 range and looking to maybe write a little bit of short puts in that area. So those are just a few of the trades that I'll be looking for, guys. And one of them is an oil play as well. Oil has been less than favorable recently because of the fact of oil seasonality right now. Fall is usually known as the worst seasonal period for oil. That being said, it's freeing up a lot of very interesting trades. OXY is one of them, but I need to get a little bit cheaper, guys. If we can find OXY in the high 40s, think 48 to 47, we'll be coming into another big area of prior support before this massive candle, right? And could be an interesting play to trade OXY. The other trade I'm looking at is CVX. CVX in the 140 range, huge range of support, guys. Big support for the last 2 years here, but was also prior all-time highs. Looks like UPS, right? Same concept. Big prior resistance to the all-time highs. 2014, 2017, 2018. Now we're using all of that as support. So those are two oil plays that I'll also possibly be looking out for over the course of the week. And all of your other favorite earnings plays, right? Depending what they are. Those are just a few of the ones that I'll be looking for the bonus plays, but it's going to be all about earnings for this week, guys. So hopefully that's pretty much everything I had for you guys today. So hopefully that video was interesting for you. If it was, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We do these videos every Sunday afternoon in preparation for the upcoming week. And if you have any questions on the strategy, guys, please feel free to leave them down below in the comment section. I will help you out. Any questions about the strategy, or maybe if you have a play that you want a second opinion on or something like that, I'll do my best to give you my opinion on it, not financial advice. And in the event, guys, you want to be part of the Discord and get all of these wheel trades, and we don't only do wheel trades on the channel, of course, guys, share trades, call option trades, long-term investment, all my trade idea setups, The private live streams that we do Monday through Friday before the open for about an hour are private video content, and ask me any and all questions about trades, about options, about anything all throughout the day, guys. If you want to have access to all these plays and a chat with me, the link to the Discord is always down below in the description. So looking forward to seeing you in there if it's something that interests you. So take care, guys. I will see you in our daily market recap videos Monday through Friday. Have a great rest of your Sunday. Take care and peace.